All right, y'all, welcome to session 6 of the trading course. In this session, we will be going over Market Cipher 101. Now, we had to change things up a little bit today. We were planning to live stream this. However, my internet is currently down due to some storms in the area, so I will be recording this video. And if you are part of the live stream, we are going to do the live questions and answers tomorrow, which is Friday at the same time, 2 p.m. GMT -4 that we would have live streamed this course today. So I apologize for anybody who is part of the live stream, but that's just the way it has to be. It's out of my control. All right, guys, so Market Cipher 101. I'm sure everybody is familiar with the indicator Market Cipher, and that is what I am looking at on my screen right now. Market Cipher is divided up into 3 different sections. We have Market Cipher A. Market Cipher A is what you see up here on the actual candles, and what it does is it gives us this nice EMA ribbon, and then it will print little icons above the price action. We have various different kinds. Then down here we have Market Cipher B. This is a whole bunch of different oscillators wrapped up into one nifty indicator. And then we have Market Cipher support and resistance, which is not on my screen just yet. Now, the goal of this session, guys, is not necessarily to teach us how to use Market Cipher as much as it is to just get ourselves familiar with Market Cipher, the different aspects of it, different things that we have at our disposal to look at, to utilize when it comes to creating our own trading strategy. So we're going to start by going over Market Cipher A. Market Cipher A is a series of indicators, and it prints above the actual price action, above the candlesticks, and it contains the following elements. We have the EMA ribbon, we have small diamonds, we have blood diamonds, we have green dots, yellow X's, and purple triangles. So we're just going to break these down one at a time. We're going to start with the EMA ribbon. Now, the EMA ribbon is just that. It's a ribbon that's made up of various different exponential moving averages. Now, one of the most common questions I get is, Jason, how do we know which exponential moving averages correspond to each ribbon on this EMA ribbon? And guys, the unfortunate answer is there really is no way to know which actual number EMA these are. You need to test it yourself by doing this. If you want to find out which ribbon corresponds to an actual EMA, you need to come to indicators. You need to come down to moving average exponential if you have that starred. If not, just search for moving average and click moving average exponential. And then what you're going to do, guys, is you are going to come over here, make the style a different color so you can see it more clearly, make it orange, and make it thick so you can kind of tell which one it is compared to these others. And then you are going to change the input, okay? So I'm going to change it to 21, and you can see that now it perfectly corresponds to ribbon 5 on Market Cipher A, okay? So we know now ribbon 5 is the 21 moving average because it's 1, 2, 3, 4, 5. Let's see if we can figure out another one. Let's see if there's a 31, right? Nope, see, look, it doesn't correspond to any of those. Try 23, doesn't correspond to any of them, right? Try 25, look, perfectly corresponds with ribbon number 6. I think that's 6. Yep, so that's how you're going to figure out the actual value, the actual length of each exponential moving average. You're going to just have to trial and error it like what I just showed you here. Now, this exponential moving average ribbon plays a very key role in determining trends, okay? You can look and just see superficially that when all the ribbons cross over themselves and we turn gray, that is a short signal, a sell signal. And contrarily, when all the exponential ribbons, all the exponential moving averages cross above themselves and we turn blue and white, that is a long signal. In general, this can be used to identify the long-term trend. Now, this is the 20-minute time frame. Let me go to the 1-hour time frame. It works the same on all time frames. However, as with all things when you're trading, the larger the time frame, the more reliable the signal. Now, one thing I do want to point out, guys, is it's very important if you're using this exponential moving average ribbon in order to enter long positions and short positions. it's very important that you wait for it to confirm a different color. What I mean by that is this, guys. Just waiting for the price action to cross above or below this ribbon does not necessarily mean that the price is going to continue to move in your favor. So you can see right here that we crossed under the EMA ribbon, and then we crossed above the EMA ribbon, and then we crossed under the EMA ribbon. If you were trying to take long and short positions here, you would totally get sliced up, right? You would enter short here, price would come up. You would enter long here, price would come down. It's very important that we wait for the moving average ribbon to confirm either bearish or bullish. And this is something that sets Market Cipher apart from a regular EMA ribbon or even regular moving averages. If we were to turn on just a regular exponential moving average ribbon, which I have right here, I'm sure a lot of people are familiar with this ribbon, you can see that when we cross above and below, there's really no indication whether or not we're bullish or bearish, okay, except when you see them all cross over each other. So it gives you an extra visual, okay, when they all cross above or below each other. Sometimes it can be difficult to see if you're just looking at a normal EMA ribbon. So in areas like right here, it can be very difficult to tell what is actually going to happen. So that is the EMA ribbon of Market Cipher A. Let me put this back on here. Okay, the next feature of Market Cipher A are the small diamonds. Okay, now the small diamonds are the yellow and red diamonds, and they're trend strength indicators. Yellow diamonds indicate a bullish continuation, while the red indicates the trend may be weakening. So, how does that actually translate onto the chart? The way this works, guys, is when you see yellow diamonds in an uptrend, you see a lot of yellow diamonds in an uptrend, this indicates a continuation of the uptrend. And usually it works best when we have clusters. When we have clusters of yellow diamonds together, like this, a lot of times it indicates the continuation of an uptrend. Now, this is not something you can look at alone, okay? You cannot use these yellow diamonds alone to determine that we're going to continue in an uptrend. For example, we had a cluster of yellow diamonds right here, and then we came down. We had a cluster of yellow diamonds right here, and then we came down. These clusters told us we were going to continue up, and we did. And you could even say that these clusters were pointing ahead to this uptrend, which is very true. I would say that, yes, these clusters are pointing ahead to that future continuation of the uptrend. But it's very important when we're looking at Market Cipher A that we use these icons as smaller, lesser important, I wouldn't even call them confirmations, I would call them reassurances, right? These are reassurances that price is generally going to be moving in our favor, okay? The yellow diamonds only work in an uptrend. And when we print a red diamond, it shows the weakening of a trend, okay? So you can see we have clusters of yellow diamonds, we're continuing in the uptrend, and then we get a red diamond and we come down a little bit. Same deal right here. We get a red diamond, we come down a little bit. A red diamond, we come down a little bit. A red diamond, we come down a little bit. And then we get these yellow clusters showing us upward movement. Now, these red diamonds are great places, in my opinion, if you're in a long-term trade to take profit, even if you're in a short-term trade to take profit. And what I mean by that is this, guys. Let's say that you had entered long right here. Okay, you entered long right here because, let's just say, because, as example, you got a double bottom and then you got a nice trigger wave and you see that the momentum is moving upwards. Obviously, we're going to get into that later on Market Cipher B. And you ride this price action up, and you're just making all this profit, right? And then things start to slow down. We start to print a red diamond. Okay, take some profit out. Either close the trade or take some profit out. And then, perhaps when you notice that we're bouncing off the EMA and the trend is continuing upwards, maybe put that profit back into the trade and ride the price action up higher. And then maybe take some profit out here. Another thing to do at these red diamonds is perhaps, if you don't want to take profit out, perhaps ladder in some orders here, right? When you see we're printing a red diamond, maybe try and add some more into your position at a lower price so that then you can add to your position and ride the price action up higher. Now, if you're unfamiliar with these terms that I'm just shooting out at you, that's okay. You will learn all these things. I just want you guys to have some exposure to these concepts so that when you learn about them in the actual session, you have a reference point in your mind to kind of go back and say, okay, I remember We were talking about this in previous sessions. So those are the smaller diamonds, the yellow and the red diamonds. Then we have, after those diamonds, we've got the green dots. The green dots. Actually, before that, on my chart here, we have blood diamonds. So let's talk about blood diamonds. Blood diamonds, they are a bearish indicator. And the blood diamond is used in conjunction with the exponential moving average ribbon. And they're most effective when it follows the printing of a yellow diamond. Okay, so basically, let's see if we can find one of these blood diamonds on the 1 hour. Let's see. Here we go. Here we go. A blood diamond, guys. I'm having trouble moving my computer. Bear with me, guys. Bear with me. Man, technology. Technology is not kind to Jayson Casper sometimes. Here is a blood diamond. So, if we are printing a whole bunch of clusters of yellow diamonds, and then all of a sudden you guys see a blood diamond, that is a great time to exit a trade if you are in a trade, especially if it's happening in conjunction with a red trigger wave on Market Cipher B. If you see Market Cipher B prints us a nice anchor wave and then a nice tight trigger wave where there's a clear direction, and we're also printing a red diamond, that is a great time to exit a trade if you are in a long. This is a great time to look for a short position if you are looking for a short, okay, because it indicates that we are going to be moving down. And again, it's very important to use all these things on Market Cipher A in conjunction with other indications, in conjunction with Market Cipher B, in conjunction with support and resistance, in conjunction with trend lines, in conjunction with Fibonacci levels. Everything that we've been learning so far, you will look at Market Cipher A not as confirmations. Okay, you can honestly, guys, but in the way I use it and the way I'm going to be teaching it is not to use this as confirmation, but to use it as reassurance. Okay, if you're in a trade and you're seeing these bullish clusters of gold diamonds, that's reassuring you, okay, we still have some upward potential to go. If you're in a short and you're seeing red diamonds and yellow X's, that's reassurance that we're going to keep heading down. We're going to get to the red X's in a second. But these big blood diamonds, okay, they are usually a good place to enter a short position if you are scalping on a smaller time frame. Let's just quickly go back in the history and look at what happens pretty much every time we print one of these blood diamonds. Print one right here, we come down a little bit. Could have made a nice little move. Or you could have entered here and ridden all this price action down. You could have entered right here and ridden this whole price action down. Again, you want to use these in conjunction with the exponential moving average ribbon. So if the ribbon is not confirmed bearish, that is a little bit more risky entering a short position, as opposed to if it's already confirmed bearish on the EMA ribbon, you have more assurance that we're going to have more downward momentum. Okay? So again, this is not something that's set in stone. Right here we have a blood diamond. EMA looks like it's curving over. We don't know for sure yet, right? All the way back here. So we could have entered here and ridden this price action down. But my main point is these are just reassurances, little indications of things that might be coming in the future. Next we get to the green dots. Okay, these green dots are bullish confirmations or bullish reassurances that we are going to be continuing on in a bullish trend. So the green dot on Market Cipher A is a bullish indicator and is most reliable on a 6-hour time period and higher. So this is most reliable on the higher time frames. Just a quick little caveat, guys. On the lower time frames, a lot of times you will see these green dots on the lower time frames, and they will actually indicate a bearish trend. I know that sounds crazy, but look at this. We print a green dot right here, and we come right down. We print a green dot right here, we come right down. Right here is one of the times where we print a green dot and come back up, but you can see that a lot of times these green dots do not necessarily mean we are going to come up on a lower time frame. Look at this. Literally, sometimes on a lower time frame, you can use a green dot to predict a bear trend. Green dot, boom, plummet. Green dot, whoof, plummet. Green dot here, plummet, right? They're meant to be used on a higher time frame, and if we take a look at these on a higher time frame, we can see even on the higher time frames, a lot of times they are a bearish indicator. So take that and do with it what you will. Sometimes they are a bullish indicator, especially I have found if you see a green dot right next to a blue triangle, that tends to be a more of a bullish indication than just a green dot alone. And the reason for that is because the blue triangles represent a trend reversal. A trend reversal. Let's check out the blue triangles. These things indicate a trend reversal, a possible reversal of the previous trend. So if you see a blue triangle printing, it doesn't mean that the current trend that we're in is going to reverse. It's a reassurance that the previous trend we were in has already reversed, like this, guys. We were coming in a little downtrend right here, and now this blue triangle is signifying to us that this downward trend is no longer going to continue. Same with right here, right? We came on a little downward trend. Our EMA turned gray. Now this bluish triangle right here is telling us, okay, we're coming out of that downtrend. We're going to head back up into an uptrend. And if we come down to a lower time frame, to the 1 hour perhaps, we can see that sometimes they are not the most accurate, but sometimes they are. And that's really the thing with Market Cipher A, guys. These are reassurances. If you are reassured that we are, like for example, we want to use these things in conjunction with what we already see happening on Market Cipher B, support and resistance, etc. Right here, this was telling us that we were coming a reversal of this downtrend, right? However, we continued reversing on the downtrend. Now, you could say that these blue triangles were telling us, yes, we are about to reverse this downtrend. You very well could take it that way. You could take it as a predictive thing where it's measuring the momentum of the market. It's measuring the fact that we're coming to, we just came to a double bottom. We're coming to another double bottom. But you can't just look at them to enter and exit trades, okay? You need to look at these things as reassurances that go along with your other technical analysis. That is the way I use Market Cipher A. I use it as reassurance. The thing I use Market Cipher A the most for, guys, are these yellow and red diamonds, okay? I found these to be the most accurate indications on Market Cipher A on all time frames, on the 24-minute time frame, you can just tell that if we're printing these clusters of diamonds, okay, and then we get a red diamond and we cool off a little bit, and then we start printing more clusters, that's like confirmation, reassurance that we are continuing on in the uptrend. Okay? These right here, confirmations, reassurances. If you're in a long position and we start printing red X's and red diamonds, that is an indication that you should probably get out of that long position, or at least take some profit off the table, or at least look to add to your position at a lower price. Okay, so let's talk about these X's. We're going to talk about the red X's, and we are going to talk about the big yellow X's. So the big yellow X's, these indicate market manipulation, and these are actually extremely reliable signals. They are extremely reliable signals. If you are in a long position and you start seeing yellow X's, you should exit that long position. Yellow X usually indicates that whales are dumping Bitcoin or whatever asset you are looking at. It means people who are holding a large amount in the market are selling. Usually means they're selling. It could mean that they're buying as well, guys, but usually the manipulation is in the downward direction, right? The dumping of Bitcoin. When you see indications, right? You get all these blood diamonds in a row, right? You get these blue triangles in a row signifying a reversal of this uptrend, and we're getting these red blood diamonds and then a little red X and then a big yellow X. That is a very bearish writing on the wall, right? That's another analogy I can use, guys. Writing on the wall. Okay? These are giving us signs of what is about to happen, and it's not necessarily giving us everything in the most detail. Just like, if anybody is familiar with the book of Daniel in the Bible, that's where the phrase handwriting on the wall comes from. This is handwriting on the wall, where it's telling us in vague detail what is coming. If you see a yellow X, you need to, if you're in a long position, get out of that long position. If you're in a short position, cool. You're gonna be in for a good time. If you're in a short position and you see a whole bunch of yellow X's popping up on the chart. Yellow X's are also very accurate on the lower time frames, which is rare for an indicator. It's accurate on the lower time frames. See, look at this. We printed a yellow X on the 6-minute, came down. Yellow X on the 6-minute, came down. I know we've been printing a lot of yellow X's lately. Yellow X, boom, came down. Yellow X, boom, came down. On the lower time frames, guys, these yellow X's are very reliable. Here's another one. Came down right as soon as we printed that yellow X. So, I would say when it comes to indicators on Market Cipher A, yellow X's on lower time frames are probably one of the most reliable signals that you have. The yellow X's and the red blood diamonds, when it comes to actually predicting movement of the market on lower time frames, the yellow X's and the red blood diamonds, I would say, are the most accurate to use to actually enter a position. So we have one more thing to talk about. Those are the red X's. The red X's are smaller than the yellow X's. They are a bearish indicator. Again, all of these icons, guys, are used together with the EMA ribbons. So basically, these are printing based on what the EMA ribbons are doing, okay? Based on what the EMA ribbons are doing, these are giving us little indications. So, unless you're an expert at understanding every little dip and divot in the EMA ribbon, then these are going to be very helpful to you. And basically, the most effective usage of the red X is when it follows the printing of a red diamond and the EMA ribbons are almost fully constricted, changing to the bearish color. So these red X's are going to be the most accurate when they're combined with a red diamond like this, a blood diamond, and we can see our moving averages are very tight together, right? They're not spread apart, they're tight together, and they are turning gray. That is when our red X is going to be the most accurate. And with all of these guys, we are going to be looking at them together. If we see things together like this, where we see, two blue triangles in a row indicating that this little uptrend is about to end, and then we see a small red X and a small red diamond, that's a great indication we're going down. If you see a small red X and a big red diamond and the moving averages are turning gray, awesome indication that we're going down. Always look at what the moving averages are doing, guys. So if we're getting a green dot right here, and you can see that the moving averages are very tight together, it looks like they have just, from being fanned out, they were fanned out up here, and then they get really tight together, and we're printing this green dot. Don't take that green dot too seriously. On the contrary, if you can see that we've already been pretty tight, and we've already been pretty bearish, and you see the moving averages start to fan out, and then we're printing a green dot, take that green dot more seriously. But again, these are all just reassurances. Reassurances. I would not use them as confirmations. I would just use them as reassurances. So that's pretty much Market Cipher A, y'all. And now we're going to get into Market Cipher B. Now, in my opinion, Market Cipher B is the most powerful part of Market Cipher, because this is really going to tell us the direction of the momentum in the market. Now, Market Cipher B is a series of oscillators, and these oscillate above and below a zero line, and they act as a visual representation of market momentum and direction. Okay, so here are some of the key features, guys, and I'm just going to zoom in here, and then we're going to talk about this more. But this green and red wave right here is the money flow wave. The money flow wave. On an actual chart, you can see it right here. This is the money flow wave. Just this red wave right here, okay, and it comes up to the green part right here, what I'm outlining. This is our money flow wave, and this is very, very important. What this represents is money coming and leaving the asset, okay? If you see the money flow crossing below this zero line and turning red, that means money is leaving the asset. And if you see this money flow crossing above the zero line and turning green, that means money is coming into the asset. And I just realized before I get into the actual waves and stuff, let me just talk about Market Cipher B as a structure. Market Cipher B is an oscillator, and what that means is these waves are oscillating above and below what we call a zero line, okay? A zero line. Let me kind of show you exactly what that is. So if we come into Market Cipher B and we just turn off everything, okay, we'll just turn off everything. Now we'll keep that on there. This is Market Cipher B bare bones. And this line in the middle right here is what we call the zero line. The reason we call it the zero line is because if you look over here on your right, you'll see that there is a scale of numbers going from 100 all the way down to negative 100. And right in the middle is 0. Okay, that's why we call it the zero line. And basically, this is our center point. This is our starting place from which all momentum is measured. Right? If this was a pendulum, this would be the direct center of the pendulum, and the pendulum would swing up here, then it would come back to the middle, then it would swing down here, then it would come back up into the middle at the zero line. And so all our waves, everything that we're looking on Market Cipher B is going to be printing in relation to this zero line. And all oscillators work this way. And then up here, we have our 60 level, and down here we have our negative 60 level. These are marked out when you get Market Cipher because these are significant levels. If a wave crosses above the 60, that is considered very high. And if a wave crosses below the negative 60, that is considered very low. Another term for these, very high and very low, are oftentimes referred to as overbought and oversold. If Bitcoin or any asset pair that you're trading is overbought, the momentum will come up above the 60 line. And what we mean by overbought is people are paying too high of a price for it. Okay, Bitcoin is becoming overvalued short term, right? And when an asset becomes overvalued, we know eventually momentum is going to swing back in the other direction so that it can regain its equilibrium at a fair price, which would be around the zero line. And then when Bitcoin comes down under here, that becomes oversold, meaning Bitcoin has become too cheap. Too many people have sold their Bitcoin, and now Bitcoin is ready to come back and find its equilibrium at the zero line. And this is how oscillators work, guys. And these levels are significant because when we'll get into the RSIs and all those things in a little bit, but these levels will help us when we're entering and exiting trades because they're very significant when it comes to the momentum of Market Cipher. So now that we've dealt with the basic structure of it, let's turn everything back on. And we'll just take it one thing at a time. So let's start with our money flow. This is our money flow. And like I said before, when money flow crosses above the zero line and turns green, this is money coming into the asset. CryptoFace always makes the analogy that it's like water coming into a garden, right? If you have water coming into a garden, you are going to have growth. And what do you know? As soon as, check this out, the money flow crosses from red into green, right? The exact same time, what happens to our price? What happens to our Market Cipher A? What happens to the movement of price and the price action? It starts to go up. The exponential moving averages start to fan out, right? It's all working together in conjunction. It's all working together in conjunction. So when you're looking at your icons on Market Cipher A, and you see these green dots here, okay, and you see these blue triangles here after we were in a downtrend, pay close attention to these, what was I calling them? I was not calling them confirmations, I was calling them reassurances. And as you're looking at these bullish reassurances, right, clusters of yellow of diamonds, a green dot, two blue triangles, you're coming down here on Market Cipher B and you're noticing, hey, guys, it looks like we're really about to curve up and money flow is about to cross from below the zero line to above the zero line. Now, look at here, guys. We were in a very similar position where it looked like money flow was going to cross over here, but notice something different, right? Notice something different on Market Cipher A. We were not printing any kind of a bullish indication or reassurance right here. None at all, okay? We start out this whole upward curve with a red X, and then we finish it up with a whole bunch of red diamonds, okay? Bullish signals. On the contrary, when we come over here, right before we're about to get a real money flow cross, we start to get these bullish reassurances on Market Cipher A. That's what I mean by you have to use Market Cipher A in conjunction with everything else. You can't just look at this alone. I would look at Market Cipher A as a reassurance of what you see happening on Market Cipher B. Again, if you see, like, it looks like money flow is about to curve up, because, you know, if this was in real time and you saw something like this right here, you would say, man, money flow is about to curve up on the 6-minute time frame. Maybe I should be looking for a long. But at the same time you see money flow curving up, you have just seen a red X and you just see a red diamond. So my reassurances are telling me we're going to dip down a little bit more. Then we come over here, money flow starting to look like it's going to curve up, right? Starting to look like it's going to curve up. And what do we see here? We see bullish reassurances. We see a blue triangle signifying a reversal of this downtrend. We see 2 green dots, right? And then, you know, we start to see our EMA ribbon fanning out a little bit. And this would give us the reassurance that, yes, this is probably a really good money flow, is about to cross over. I should start looking for a long. It's just an example, guys, on how to use these things. That's the money flow. Just look at the money flow on any time frame. Specifically, let's look at it on the 24-minute time frame. And you can just kind of see that money flow plays a very significant role in the price movement. If you see a money flow crossing over from red into green, we get a pump. If you see it bounce real quick off the zero line, we get a pump. Even sometimes, guys, if it just comes down and bounces off that zero line without even turning red, we will get a pump. Money flow is very, very significant, and for some reason, a lot of people just kind of ignore it on Market Cipher. And I think it's actually one of the most important things you can look for on Market Cipher B is the money flow. Look at this. We get a cross and a huge pump. We get a cross to the red side, and we get a huge dump, right? Even before we print all these yellow X's and red X's, money flow comes to the downside. We get this huge dump. So I encourage you guys to just take apart Market Cipher B, right? The way I did this is you just come to your settings and you check what you want on, right? And what you want off. And I just only put on the money flow. And just go back and back test the money flow. Get a feel of how it works, how it affects the price, how it affects the movement of things on different time frames. Check it out on the 24-minute. Check it out on the 6-hour, right? Look at the 6-hour. This is some crazy stuff, guys, on the 6-hour. We get a money flow cross on the 6-hour. You could have just entered long on every single money flow cross on the 6-hour. And it's kind of hard to see down here when Bitcoin price was so low compared to what it is now. But if we zoom in, we can see, you know, we get these money flow crosses, boom, a huge pump. 6-hour money flow cross is a huge pump. Money flow cross to the downside on the 6-hour is a huge dump, a huge dump. And again, we're getting the reassurances. Market Cipher B telling us money is leaving the asset. We're getting reassurances on Market Cipher A. We're getting these trend reversal signals. We're getting these we're getting these market manipulation signals. We're getting all these red diamonds, right? Everything is giving us reassurances on Market Cipher A. Really, guys, I use Market Cipher B as my main confirmations, and I will use Market Cipher A primarily for the moving averages, and if I do use the icons, is for my reassurances. Okay, so that's the money flow, guys. Now let's talk about these momentum waves, okay? These blue momentum waves. Now, these blue momentum waves, let's see if I can, the blue momentum waves. What these do is this is telling us the overall momentum of the market. And there's two parts of this momentum wave, okay? We have a light blue wave and a dark blue wave. I'm going to turn off the money flow, and we're just going to put on these waves. And this is telling us momentum in the market. Let me zoom in on the chart here, get a refreshed kind of perspective. And I'm going to take off Market Cipher A for a second, just so we can see more clearly what's happening here. These are two waves, and they're crossing over each other. You can see that when the light blue wave crosses behind the dark blue wave, that signifies a little downturn in momentum, okay? And then when the light blue wave, when the dark blue wave, so the light blue wave crosses behind the dark blue wave, and then it peaks back out of the dark blue wave again, and that signifies upward momentum, right? And then on the bottom of the chart, below the zero line, the opposite is true. when this light blue wave is peaking out, that signifies that we are in downward momentum, and then when it goes back behind again, that signifies that we are in upward momentum. And you can kind of look at these momentum waves as the ebbs and flows of this money flow, right? Because money flow is kind of ebbing and coming and going, right? It's not a smooth wave. The money flow is not a smooth wave. It's a very bumpy ride. It's a bumpy ride. And these blue momentum waves are kind of giving us the finer details of that money flow. At least that's how I interpret it. They're showing us the momentum of the market. And what's really important to know about these momentum waves, guys, is when they come up really high above the 60 line, or when they come down really low below the negative 60 line, this is indicating to us that we have gotten to either a top or a bottom of momentum. Either a top or a bottom of momentum. And when we start printing these waves so high above the 60 line, and when we start printing these so low above the 60 line, it indicates to us that we should start to look for price to move in the opposite direction. Let me go to the 1 hour chart. I think that I can highlight this better. But look at this. When we start printing waves really up high, like this, it's time to start looking for momentum to start moving in the opposite direction. And again, once we start printing waves really low like this, it's time to start looking for momentum to go back up. And when these waves cross over each other, they will print little dots. They will either print a green dot or a red dot. And I'll put those on right now. Let me see here. No, that's... Oh yeah, blue wave crossing up, blue wave crossing down. These are the famous green dots and red dots, okay? When a wave crosses, this little dot will print to tell us that the wave has officially crossed, okay? Now when it comes to these momentum waves, the most powerful way to use them is to look at them as a whole. To look at them as a whole. Now, a lot of people get caught up at looking at these things and they ask questions like, well, how high does it have to be considered an anchor wave? How low does it have to be be considered a trigger wave? I'm going to explain all that right now. So there are two types of waves that you will have when you're looking at these blue momentum waves, okay? I guess, let me see. Oh, I don't mean to have that here. Let me see if I can open a new text document for us here. Okay, there's two kinds of waves. We're going to have an anchor wave and a trigger wave. Okay, anchor wave and trigger wave. And in general, I'm going to expound on this more, but in general, an anchor wave is a large wave that prints either below the negative 60 on the bottom or above the 60 on the top. Okay, and a trigger wave generally is a wave that prints like it's a shorter wave. So an anchor wave is a longer wave and a trigger wave would be a shorter wave. So right here, this is an anchor wave, and then these would be considered trigger waves because they're shorter. Trigger waves are going to be printing lower highs and lower lows. Higher lows. Trigger waves on the below the zero line are going to be printing higher lows, and trigger waves above the zero line are going to be printing lower highs. So we can consider this an anchor wave. We can consider this a trigger wave because it's a lower high. We can consider this a trigger wave because it's a lower high. Okay, so really, the anchor waves and the trigger waves are all about how high they are in relation to one another. And even more important than that, guys, is not necessarily the height of the waves, but it's this. When we're looking at Market Cipher, we need to look at this thing as a whole structure. We need to look at Market Cipher B as an entire structure. Okay? This is interpreting all the price action that's happening on the chart above, and it's giving us a visual representation of what is happening in the market. Okay? And our goal when we're looking at Market Cipher B is not to point out specific waves and specific dots, but it is to look at this thing as a structure. And if you take your pen tool and you just draw on Market Cipher and generally outline the overall movement of everything here, right? You can see that it makes a very distinct shape. A very distinct shape. And what we're doing here is we are looking for tops and bottoms. Tops and bottoms, and it's very easy to see tops and bottoms when we start drawing on Market Cipher. Like this is a top because the shape of Market Cipher formed a top. This is like a top right in here, right? Because the shape of Market Cipher is forming a top right in here. This would be considered a bottom right here, okay? This would be considered a bottom right here. And it just so happens that these large waves coincide with the top and the bottoms. And so when you're looking to identify if something is an anchor wave or if something is a trigger wave, don't get caught up with the height of the wave. Don't get caught up with how far away a trigger wave is from an anchor wave. What you need to be looking for is overall direction of the market. And when you identify an area that is a clear bottom, meaning you have been able to draw on Market Cipher these kinds of sea serpenty lines, and come to a place where we've clearly reached a bottom, where it's starting to curve back up, you would call that your anchor wave. This is your anchor that is giving you your orientation. It's giving you your reference point from which all other waves look toward. When you find your bottom, all other successive waves that print are going to be looking back to this initial bottom, and you are going to be watching to make sure that the direction is continuing upward with each successive trigger wave that prints. Now, it's not going to be perfect, guys. That's the thing. It's not going to be 100% perfect. That's why we're not looking for dots. That's why we're not necessarily looking for waves, but we're looking for direction. We're looking for direction, and we're learning how to interpret Market Cipher based on its direction. And we're using money flow. We're using the height of these waves. And when we come across a place where the blue momentum waves give us a clear bottom or give us a clear top, okay, this is going to be the reference point from which all other waves look toward. Now, there are some other very important things about these blue momentum waves, guys. When we are in a very strong uptrend, okay, you are going to notice that we will not print any blue momentum waves below the zero line. And when we are in a strong downtrend, or even a medium downtrend, we will not print any momentum waves above the zero line. Now, there's always going to be exceptions to this, right? We're in a strong uptrend, we're printing these little waves right here. We're in a medium-term downtrend, the majority of the waves are printing below. The majority of the wave crosses are having below. The majority of the dots, right, which signify our waves crossing each other, are happening below the zero line. There's more red dots below the zero line here than there are above the zero line. Okay, that's very significant in determining how we're going to be trading the markets using Market Cipher B. Because here's the thing, guys. We have what some people would consider a really nice anchor wave up here, right, where we've reached the top. Seems like we've reached the top here. But look, price keeps coming up. Price keeps coming up. Why is that? Why is price keep coming up? Well, it's because if we look down here on Market Cipher B below the zero line, you can see that we formed like this nice bottom here, right? We formed this nice bottom here, and now we stopped printing waves below this zero line. So we're not really looking at anchor waves up here right now. Our focus is on the bottom. Our focus should be on the bottom. When nothing's printing on the bottom, our focus should be really on the bottom if we're looking to continue to ride this uptrend. And the opposite is true if we're continuing to ride a downtrend. Now, notice what happens here in the market, guys. Market Cipher B will tell us with these momentum waves what is going to happen in the market before it actually happens. We can see right here, look at what's happening. We're drawing on Market Cipher B. We're seeing the direction come down. We're seeing the sea serpent dive back down under the water, and we're seeing it happen before the price actually drops. So price drops right here, right? This vertical line. Look at this downward momentum that we're seeing on Market Cipher B even before price starts to drop, right? And even, right here especially, this specific area, we just see lower, lower, lower. We're trading sideways, but we see the momentum waves ticking down. That is a sign to us that we are about to have a dip in price. And the opposite is true at the bottom. We form our bottom right here, just like we formed our top up here. But this is not necessarily where we are looking to long. This is not necessarily where we are looking for price to change direction. This is where we begin expecting price to change direction. Anchor waves are where we start expecting price to soon change direction. Because look, we start trading sideways for a long time. Once we print this bottom, we don't start to head up. Once we print this top, we don't start to head down. We print the bottom, we print the top, price is doing its thing, trading sideways, moving in an uptrend. But once we start to see the momentum, once we start to see the general direction of market Cipher B, when it prints these trigger waves, when it prints the higher lows on the negative side, when it prints the lower highs on the upper side of the zero line, that's when we can really expect to see things change. That's when we can really expect to see things change. And so we have our anchor wave, we have our trigger waves. You would want to start to look to long when you get this bottom, and then when you start to see these trigger waves forming. So I hope that makes sense. I know it's a little bit confusing because a lot of people want to look at market Cipher B and just look for a wave or just look for a dot and enter based on a wave or a dot. And there definitely is an aspect of that you can do, right? Like CryptoFace's divergence video, where basically he's just looking for two waves, one higher, one lower, and then you enter. And yes, that absolutely can work. But expand on that, pull on that thread, and it will lead you to looking at market Cipher B as an entire entity, right? Because of course, we can draw a line like this and see, okay, we had this upward direction, go long here, boom. We can draw a line like this and see, okay, we have downward direction, we short here, boom. But in general, guys, we cannot always look at that. We cannot always look at that because there's going to be many instances where that does not work. For example, right here, we would have a perfect anchor wave, trigger wave, right? We enter here, we might be in profit a little bit before we get totally stopped out. But if we had been drawing on this thing, right, and really just watching it come up and down like this, right, we would have known, okay, when we see this happen, we're at a top. We're at a top. We're not printing anything below this zero line right here, right? So we're at a top. We need to see more. We need to see more downward movement before we can understand that the market is coming down. We need to zoom out and look at this thing as a whole. We can't just look at one little piece of it. So I hope that makes sense, guys. The next aspect of market Cipher B I want to talk about are these big green dots down here. These big green dots represent that we have come to a very significant bottom, okay? And the more that print, the more significant that bottom. If you get a double green dot down here, a snake eyes, below market Cipher B, this indicates that we have come to a very significant bottom, and it is time to start looking for a long, okay? Right here, we had two in a row, very significant bottom, time to start looking for a long. Right here, we had two, very significant bottom, time to start looking for a long. It's very reliable when we print multiple of these green dots right here. Now, some people want to just long every green dot they see. That's not the best thing to do. The best thing to do is use confluence between these green dots, between the overall direction of market Cipher, the money flow, the EMA ribbon, everything that on market Cipher A, and even other indicators that I will get into later in this course. Let's see what else we got in market Cipher B. We have the VWAP, okay? This is the VWAP on market Cipher B is the volume weighted, I forget what it stands for. The VWAP is basically showing us here. Let me turn it on real quick, and let me go to the market Cipher website real quick to get the actual definition for you, because I don't want to speak wrongly here. Let's go to tutorials. Let us go to this market Cipher users guide, and guys, I linked to this in the outline for this session. But this will give you all the information that you need about these indicators. Tell you exactly what everything is. So the VWAP momentum wave right here. The VWAP momentum wave is not the same as a traditional volume weighted average price. This indicator is used in market Cipher support and resistance. We'll get into that later. The VWAP momentum wave is intended to simulate some aspects of the traditional VWAP, but is based on momentum. So basically, it's giving you an average price, but it's also incorporating some form of momentum into here. So a lot of people use this as a secondary or primary confirmation to enter or exit a trade, where if we look at the VWAP, I call it the WAP, all right? If we look at the WAP, let's turn off all of these things and just turn on the WAP, right? If we look at the WAP, we can kind of see that when the WAP crosses above the zero line, we get a nice upward movement in price, and when the WAP crosses below the zero line, we tend to come down a little bit. When we cross above, we tend to come up. When we cross below, we tend to come down. When we cross above, we tend to come up. When we cross below, we tend to come down. So it can be used as a great indicator or even confirmation to enter or exit a trade. Now again, it's very important that you don't simply just use the VWAP in order to enter and exit a trade, because if we turn off our Heiken Ashi candles right here, right, and we just look at our VWAP cross, we can see that we would have entered right here, and then we would have exited right here, and we would have been in, basically break even. We would not have been in a good trade, or we would have entered right here, and we would have gotten out right here. It would have caused us to buy high and sell low. Right here, we would have entered here, and we would have exited down here, right? We would have. It's so easy to if you're just going to use the VWAP, you will get sliced up in these sideways moving markets, right? You will get sliced up, and you will die. Right? It works once in a while. Our eyes are always drawn toward, when we're backtesting indicators, our eyes are always drawn toward those awesome moves. It's so easy for our eyes to come right here and say, wow, look, the VWAP crossed, and look at that. Then it crossed back under, and man, look at that. I'm just going to long and short this thing. It won't take you long before you get sliced up, right? You're going to cut your hand in a deli slicer. I've done that before. It's extremely unpleasant, and the aftermath is very unfun. So don't just use the VWAP to enter and exit. Use it in conjunction with other things. Use it in conjunction with the momentum of the market, right? Let's turn back on our waves here. Sorry about that, y'all. Let me get here. Let me turn back on our light blue, our dark blue waves. Let me turn back on our money flow. And let's draw on Market Cipher again. Let's draw on this thing again, y'all. Sorry, Southern accent just pops out. Let's draw on this thing. Look. Coming down, right? Coming back up. Coming down. Coming back up. If you see that the VWAP is crossing up like this, and you can clearly see upward direction in Market Cipher, then take that WAP cross very, very seriously, okay? Right here, again, we're printing another tight trigger wave. So when you see the VWAP cross over the next time after that, cross above that zero line, you can use that as a confirmation to enter. Don't just do every single cross. You want to make sure that you are using Market Cipher B as a whole. You're looking at these momentum waves. So you're looking at the money flow. You're looking at the VWAP. The more things you can combine, the better. Check this out right here. For example, this is like the perfect storm of perfect entries using Market Cipher B. We've had our bottom. We've identified our anchor. This is anchoring us at a bottom from which every other wave that prints after this will look back to get its reference point, to get its orientation, right? And then right here, we have the perfect storm. We have the money flow crossing. Boom. We have a tight trigger wave forming. Boom. We have the VWAP crossing up above the zero line. Boom. We could have entered right in this area somewhere and taken advantage of this large move upwards, right? We want to look at everything together. And guys, this whole concept of finding confluence between Market Cipher, this becomes very powerful when you're not only using Market Cipher, but you're also using everything else that we talked about during the whole entire course so far. Support and resistance, trend lines, Fibonacci, and what else did we talk about? Did I say moving averages? Moving averages, patterns, triangles, cup and handles, pennants, bull flags. If we use all these things in conjunction, this is how we stack our elevating factors on top of each other. This is how we find high probability trades. And these are the things we are going to use to build our strategy, and we're going to get into that later in the course. But all these things, all these aspects of Market Cipher B, all these aspects of Market Cipher A, all these aspects of basic technical analysis are going to be tools and options in our tool bag from which we can take to build our strategy, and then we can set up our own confirmations so that we know when A, B, C, D happens on this market in this time frame, this is when I'm going to enter a trade, and that's how you get confident trading. Okay, so it's very important. Actually, let's take a look. Let's take a look at something. Now, earlier today, before we started to have this other little dump here, we were all very well aware of the bull flag, right? The bull flag that was forming right here, right where we had our flag pole. And then we were trading in a downward channel, right? A downward channel like this. And it looks like we might even be retesting that channel, guys. Retesting the channel. Yeah, very curious to see what's going to happen here. Are we going to get a bounce off of this channel? We have a support. We have a trend line. I don't have my full market cipher B right here. But just quick, guys, you know, when we started to break out of this is the 1 hour. I hate the 1 hour. Okay. When we started to break out of this thing on the 24-minute, which I really like, just look at all the confluence we had in market cipher, right? We printed a bottom, which you could consider this an anchor wave, right? You can. It's subjective. Anchor waves can be subjective, guys. They can be subjective. But really, when you're analyzing market cipher B on a time frame, you need a place to start. You need a place to orient yourself. You need a reference point for all future waves. And great places to do that is just by looking for these bottoms right here. These bottoms. So we have our bottom. Then we print a higher wave. We consider this a trigger wave right here. Okay. And as soon as we were printing this trigger wave, we notice our VWAP is crossing over the 0 line. Okay. And we know that bull flags are going to break out bullish. That's typically what happens to a bull flag. Looks like, you know, I don't know what's happening right here, right now. We're either getting a retest before we move up, or it was just a fake out. I have to analyze things on higher time frames to know for sure. But we are getting a pretty significant bounce off of this. But if we know we're going to break out of this bull flag bullish, that's where we come down here and we look for confluence in market cipher. We printed a bottom, we printed a trigger wave. The VWAP crossed above the 0 line. We might turn on market cipher A, right? And see if we can see any kind of indication that we're going to continue bullish. Now, right now, off the top of my head, I don't see any right here. I don't see any. So I don't have any reassurances or affirmations that we are going to break out. But we have the pattern, which is a powerful signal in and of itself, right? The bull flag pattern itself is powerful. And then we're coming down and looking at market cipher B. And this is kind of how we want to analyze the chart, right? We want to look at everything we possibly can, get all the data we can, and then make informed decisions and stack the probabilities in our favor. So the next step of market cipher B, oh, and let me just point this out real quick, guys. Down here, we have the money flow bar, which basically just tells us when exactly the money flow crosses. It can be sometimes hard to tell, and sometimes the money flow can go from like red to green real fast without you knowing. So this will just tell you what color the money flow is at any given time. If this bar is green, we know money flow is in the green. If it's red, we know it's in the red. When it changes color, that's the exact crossing point. Okay? So, next thing I want to talk about on market cipher B is the, I guess, well, yeah, we'll go over it just because it's here. The 100% level, which is all the way up here, this is the very top of market cipher B, all right? I guess it technically goes all the way up to like 140, but really, we're never really going to print all the way up there, right? We're really not going to see waves printing way up there. And same deal with the 100 down here. And then we have these right here. These are called the triggers. These dotted lines before you get to the 60 and negative 60. I think they're at 52 and negative 52. They simply just function as letting you know that we're getting close to that overbought, oversold region, right? Letting you know, yeah, we might not be completely overbought, but we're pretty close. What else do we have on here? Then we get into our RSIs and our RSIs and our stochastics. So I will cover those in 1 second, guys. I will be right back. Please stand by. All right, sorry about that, guys. So I trust that everybody has had plenty of time to look at this picture here, so you're all fully familiar with what all these things are. So let's get into the RSI and the stochastics. Okay, guys, the RSI, let me turn that on right now. Let me turn on the RSI. Yeah, right here. And guys, after we finish Market Cipher B, we're going to cut this session, and then we will pick up in the next session because we're actually ahead of schedule a little bit. So we have two RSIs here. We have a regular RSI and a stochastic RSI. Let's just cover the regular RSI first. Sorry, I'm going to keep these on here, and I will turn off everything else just so that we can kind of familiar ourselves with the RSI. Now, some of you might be familiar with an RSI just from using the regular indicator RSI, and this stands for the Relative Strength Index. The Relative Strength Index, and basically, an RSI will oscillate over zero line, right? Like what we see happening right here. But in general, I'm sorry, it's not oscillating over a zero line. It's oscillating between high and low. Everything is above zero. And basically anything that's above 80 is considered overbought, and anything that's below 20 in general is considered oversold. And so the RSI is basically telling us, sorry guys, I'm stumbling over my words. The RSI is telling us if Bitcoin is overvalued or undervalued. So if the RSI comes up here, right, it's telling us that Bitcoin is becoming overvalued short term in the market, and it's only a matter of time before price finds equilibrium and we're going to come down a little bit. And if the RSI is oversold, that means Bitcoin is trading too low, and it's only a matter of time before we come back up and find equilibrium in the market. So in general, not all the time, right? Because look at what happened here. RSI was super high and we had a pump. In general, a lot of people will look at the RSI as an indicator to tell them if Bitcoin should be coming down or should be coming up in price. If the RSI is up here, right, that means we should be expecting it to come down. If the RSI is down here, that means we should be expecting it to come up. Now, this is something that we want to use in conjunction with many other indicators. And there's something important that we need to know about the RSI, and I'm going to see if I can find one here. But there is something called a divergence, which I will get into next session when we're going over Market Cipher more. But a divergence is, guys, when the price continues to go up and yet the RSI continues to come down. And I don't actually see one here, but no, I don't actually see one here. But it's important to know that they exist. So if you see your RSI coming down like this, but you see the price coming up like this, that is called a bearish divergence on the RSI, because it's the relative strength index. It's giving us the strength of Bitcoin, right? When the RSI goes up, that means Bitcoin has more strength. And when RSI comes down, that means Bitcoin has less strength. So if the price of Bitcoin is going up, yet it's losing strength, that is an indication that we are going to come down. And the opposite is true. If we see that the RSI is coming up, okay, that Bitcoin is gaining strength, and yet the price of Bitcoin is going down, that is an extremely bullish move, right? Because the price is going down, yet the strength is coming up on the RSI. That means that's a very bullish move. That means we're probably going to get a move to the upside. Now, you guys can do research on the RSI, like on the regular RSI. This, to me, is like icing on the cake when it comes to Market Cipher B. It's nice to have the RSI there. I've always used RSIs before I had Market Cipher. But in general, the most important thing you want to look for is confluence, right? Confluence. Like if you see that the RSI is really oversold, way below this 20 line, and you have a lot of other things in your favor, then you might want to enter a long. So when we turn back on our Market Cipher B, all the other things, the light blue, the dark blue, the VWAP, the money flow, the buy, the blue wave crossing, right? Check it out. We can kind of see that, the RSI, when it's low, when it's super low and we're printing a bottom, this is when we want to start to see things come back up. And so it's just an added layer of confluence, right? It's just an added layer of confluence. Not all the time when the RSI is high are we going to come down. Not all the time when the RSI is low are we going to go up. It's just telling us the overall strength of Bitcoin or any asset you're trading. And you can experiment more with different RSIs if you're interested. And we'll get into this more in the regular indicator session, but just type in relative strength index, turn that thing on, and you'll basically see, the same exact thing that we have up here. A little bit different because the market cipher one is modified, but you'll see the same thing where we have an overbought level, an oversold level, and it will tell you the relative strength of the asset. So let's get into the stochastics. The stochastics are another oscillator. It's very similar to an RSI. This is a stochastic RSI. And a stochastic RSI usually contains a line crossover and a zero line at the same time. So let me show you guys a regular stochastic RSI. Okay, you can see that there are two lines here. And basically, you have your overbought and your oversold regions, but people are looking for the cross. People are looking for the two lines to cross over, and that will indicate actually buy or sell signals, right? When the blue line crosses under the orange line, that would be a sell signal. When the blue line crosses above the orange line, that would be a buy signal. Now, the market cipher one is very modified, okay? So instead of having two lines crossing over, it will actually just change color for you. It will change color for you, and you can see it's very much different than this RSI. It only has one line, but basically instead of having two lines cross, it will give you a color change. So if this stochastic RSI becomes very oversold, right, it comes down below the 20 line, this would be a great time to look to enter a long, right? When this thing is red and it turns green and it's very low, that's a great time to look to enter a long. And contrarily, when this thing is green and it starts to turn red, that would be a great time to look to enter a short. Okay, but again, these stochastic RSIs and the regular RSIs, they are just affirmations. They are just assurances in my mind. They are not meant to be used as actual confirmations. Okay, they're just meant to be there if you already have your confirmations to give more elevating factors in your favor. Okay, at least that's how I use them. Now I know there are many different ways to use RSIs and stuff, but this is how I use Market Cipher B in general. So really, guys, the most important things to recap all of this on Market Cipher B: the money flow, the momentum waves, and the overall direction of Market Cipher B. That is the most important thing. The overall direction of Market Cipher B, along with the money flow and the momentum waves. The VWAP then is the next most important thing, because this is a great indicator that if everything else is in your favor, because those are the layers, right? The foundation is the overall direction of Market Cipher. Then the next step are the actual waves, and then the next step is the money flow, and then the next step is the VWAP, and then the icing on the cake are these RSIs and stochastic RSIs. Alright guys, so I'm going to wrap this up right here. We will do a question and answer session tomorrow at 2 p.m. GMT time -4, which is 2 p.m. Eastern Daylight Time. And yeah, I'm sure people will have a lot of questions, and I will love to answer these. We will get more into Market Cipher support and resistance in the next session, because if we take a look at the course, let me see if I have the outline for the course right here. We are in session 6 right now, because I thought it was going to take us 2 sessions to go over support and resistance, but well, I just did it in 1. So we have some extra time here, so I'm going to use that tomorrow, not tomorrow, on Monday, to go over Market Cipher support and resistance. And then we will move on to Market Cipher 102, where we're going to dive into more detail at looking at Market Cipher B as a whole, more detail on identifying different types of waves depending on the money flow index, We're going to be identifying divergences. We're going to be identifying repeating patterns on Market Cipher B. And I think this is really going to shed a lot of light on how to use Market Cipher B. And then we'll do the third session where we will talk about best times to enter trades using Market Cipher B. We're going to talk about the 10-1 method. We're going to talk about confluence with Market Cipher. And then we're going to get into actually executing trades. So stay tuned, y'all. Thank you for being here. And I will see those who signed up for the live stream tomorrow, 2 p.m. We will do a live question and answer just like this. All right. See you guys soon. Thank you.